Madhav joins us, Managing Partner with GTI Investment Advisory Services, joins us live from New Delhi. Madhav, good to have you back on ET Now. Madhav, last time when we interacted with you on this forum, your thoughts were that the only way markets could go up was up. Markets have gone up, but you were also confident that locally news flow and globally news flow will improve. If I look at global news flow, things are stable, but if I look at local news flow, nothing has changed.
Well, I don't quite agree. I don't quite agree. I think some things have changed. I would admit that they have not been material, but since we last spoke, as you say, the markets are up 8 or 10%, not including the last few days down. In a year that has been beset by nothing but bad local and global news, markets are up 15 or 16% year to date. These are not trivial moves, firstly. Second, if you look at the global news flow, the U.S. economy clearly seems to have done a little better. Housing activity has bottomed out quite decisively. Even today, U.S. GDP got revised up. So in a sea of liquidity and very, very low growth, wherever there are areas of stability and growth, money is flowing there, which is why the S&P has gone all the way back up and is just about 7 or 8% below its all-time high, which is staggering. If you look at India, I would say it's not so much news flow, you may be right, but the expectation flow has changed, which is what has driven the market up, in my opinion, in addition to global factors. Both the occupants in North Block have been upgraded. I think we probably have the best man for the job in the finance minister. Raghuram Rajan may not have an executive position, but I think that his signaling value is terribly important to a government that seems lost and has lost its ideological compass. So if those appointments and the noises and statements coming from them are anything to go by, I think it's material. And now, having said that, the markets are up, and now you have to go from promises to delivery, and which is why the markets may sell off a little bit here. I don't think anything material, but now the time has come for some of these reforms that are being talked about, whether it's the 5 or 6 disinvestments that Chidambaram has outlined, whether there is progress on DTC, some deregulation in petroleum prices, even FDI in retail is being talked about. So I think the time has now come for some of those actions to actually happen, for the government to stand up, to make its case, for the opposition to actually hear it, and for something to actually get done. And if I think any of those things happen, if half of them happen, I think it will be a huge positive surprise in a cynical market, in cynical and depressed sentiment that will keep propelling this market up. So I remain unfazed, except that I do agree that since we spoke, our prices are up and expectations are grudgingly up. So if they're disappointed, market will pull off a little bit, I don't think materially. If they are met, I think market starts breaking out to the upside.
So would it be a significantly better September, Madhav?
Sorry?
Would it be a significantly better September in terms of equity performance?
It's very hard to say. I doubt it very much. It's very hard to have back-to-back great months. The last 2 months have been very good. So in terms of rate of change, they may sell off. I think it's very tough to predict monthly changes. I think as an investor, and even for your viewers, I think you want to make a bet on 6 months, 12 months at a time. It's very hard to predict what's going to happen, whether the futures are closing today and Friday will be a reversal day. And some people are technical traders. That's not the way I think serious money gets made. I think you take a fundamental view, you have a valuation bias, and you have intelligent courage. And on that basis, I think you need to stay long in this market, despite the fact that it's up. And as you rightly say, I don't think the government has actually done anything. So I'm not applauding the government or policy action in India. I'm making a bet that the economy has bottomed out fundamentally. GDP will be out on Friday. I think it will be another horrible number. And I think this last 6 months will show a very important bottom. I think unit labor costs in India have improved by 35 or 40 percentage points against China. This is not trivial. And its benefits don't accrue immediately, nor are they obvious. It takes time. So I think corporate profits have bottomed out, the economy has bottomed out, because the investment cycle has been so weak in the last 12 months. If positive consequences of that are that inventory levels are very low. The slightest uptick in growth, inventories will clear out, there will be pricing power again, which is something you probably do not want to see, as an economist, but you do want to see as an equity investor. And I think corporate profits will look significantly better 12 to 18 months from now. And I don't think they're remotely in crisis. And you have a market that's selling around 14 times earnings. Mid-caps are selling even below that. And I think we're on the verge of interest rates coming down probably 100 basis points this year. And so all in all, I think the ingredients for future growth and future market prospects, to me, still are positive enough to stay long.
So with a positive view, where are you picking your spots? What's been your portfolio strategy? Have you made any fresh investments in the last 60 days, 30 days?
No, what I do professionally is a very different thing to some extent, in the sense that we are really more focused on venture capital and other opportunistic investments. So it's not day-to-day public markets investing as I used to do in my previous life. But, if I were to position a portfolio, I would get away from things that have very high levels of safety embedded, that have done very well, like the big multinationals. Bet away from that. Not that they're great companies, but they're expensive and they've done spectacularly well. And my area of focus would still be probably the mid-cap NBFCs to some extent. I would even start looking at some infrastructure areas which have done very poorly for both financing and policy reasons. I think in the next 6 months, both of them are about to change. I think there is a tremendous political impetus for the government to get growth back on the agenda. I think it's lost its way in the last 3-4 years in this inclusive growth mumbo jumbo, and it's really just basically redistribution in heavy disguise has become the watchword. I think politically they have to go back to growth, and if they do, I think infrastructure is the first thing that will have to move. So again, these are 6-12-month bets, but it's better to be early than late.
So let's spend a minute discussing and trying and dissecting the infra space. Infra is a very broad term. Within the infra space, what do you like? Builders, machinery makers, or asset owners? And what is the best way to invest?
I don't really, as I said, this is not something that I'm doing day to day, and nor would I want to talk about very specific areas. I think a lot of them are actually more stock specific rather than industry areas. And I would even make a comment that some of the broad area, and I don't want to name names because we might be involved there, the areas we like is infrastructure for infrastructure, which is companies that are facilitating infrastructure rather than actually bidding for the big contracts. And they tend to be a lot of mid-cap companies that are below the radar, that are more agile, they are less politically dependent, and frankly cheaper. And I don't want to get into the names here.
Madhav, how are you approaching the metals universe? Because Chinese data has been pretty weak. Globally as well, metals have been slumping, and a whole host of downgrades kicking in when it comes to the Indian stocks as well.
Yeah, I would stay with that. I think that a big commodity cycle has ended. I think Chinese growth is going to slow further. It's going to stay slow. I think India will be the fastest growing major economy in the world this decade. And I think the 10-year bull markets die very slowly and die a very difficult death. And I think the great commodity cycle, to a great extent, has ended. And it doesn't mean it's over forever, but I think you've entered a big multi-year bear market in commodities. There is more supply than demand. There has been replacement. And I think the last metal to crack is going to be gold. I think gold has seen its high a year and a half ago, or a year ago, I guess it was. And I don't think you'll see that high in a long time. And I think the flight to metals have been alternate currency. Flight to gold has clearly been alternate currencies. As the world manages to patch itself together, as the euro crisis stabilizes, I think that will be the end of gold as well. So all of this actually augurs extremely well for India, that with the global oasis of demand, which is the OECD, particularly the US and Europe, having gone ex-growth, all the nations that benefit off that growth, starting with China and the old Asian NICs like Taiwan and Korea, to some extent Japan as well, and also Brazil and Indonesia, are going to get reverberation effects that are not going to be pleasant. And in many ways, I mean, India stands alone as a huge oasis of domestic demand with very, very low-hanging fruit in terms of policy change that can kickstart its own demand. So India could be really an island of growth that attracts a tremendous amount of capital that we need. So I do think that metals have done their bit, and you want to stay focused on more domestically oriented companies, both in India and frankly abroad.
Madhav, so final question, since you're confident that the policy regime will improve, is it time to pick some bargains from the telecom space, the power space? There are regulatory challenges there.
I'm not sure about that. I think telecom, firstly, I'm not confident that the policy environment change. I'm a betting man, I'm betting it will change. So I'm not confident it will change. I think that's the way to bet, given where sentiment is and given where valuations are. And I don't believe that Chidambaram would say such blunt things if we didn't have the backing of multiple constituencies. So I'm just putting it in my hat and making a bet. On telecom, I think it's more complicated than that. You have to get very specific with what you think the licensing will be, what pricing will be, and that's a toss-up. So I would not get so specific. As I said, I think you have to be extremely circumspect. You cannot make broad, sweeping judgments on where to invest by industry or sector. I really don't believe you can.
Okay, Madhav, good chatting with you. Thanks as always for taking time out. Quick